Good evening, everyone. Welcome. Thank you for attending this webinar at the Center for the Women of New York. For those of you who don't know, the Center for the Women of New York advocates for women's rights and full equality since 1987. CWNY has been empowering women to reach their full potential by offering services that provide the skills, information, and support they need to address economic, emotional, and legal challenges. Tonight, this is the September Financial Literacy Series workshop. It will be about financial services. Financial services are for everyone. We'll talk about planning, banking, and more. Female financial independence. I'm going to be the host. I'm Cecilia Venezuela. I'm president of the Center for the Women of New York, and our guest speaker will be Kathy Carroll. I'll introduce her in a minute. A little bit more about the center. The Center for the Women of New York offers programs and services. We have educational programs, support services, and classes. We have panel discussions and webinars on domestic violence, trafficking awareness, health and wellness, financial literacy, and independence, such as this workshop. And our support services and classes are we do have a caregiver support group for those of us who take care of elderly family members or friends. We have a Women in Crisis support group, ESL classes, English as a Second Language classes, fitness classes, and referrals. So if you're wondering if we have service and you're not sure, you can always reach out and we will guide you in the right direction. Even if we don't offer that service, we have a lot of resources to share. Upcoming events, we will have a career panel discussion on September 30th. And in October 14th, we'll have a presentation on career mobility. Please join us. Stay, connected. Check our website for updates on upcoming programs. We are in the process of getting our building ready to start in-person programs. We just got a certificate of occupancy in Fort Totten, one of our locations in Bayside, Queens. So we're very excited to open our doors to the public. It has been a long journey. We're almost there. So we welcome everyone who would like to come and join us for our in-person services and programs. We also have a walk run, and that will be a fundraiser, which will help us with our programs that we offer for free. It'll be a fun event. You can do it either in person on October 16th, or you can join us virtually and send us picture and share in social media with us. So please join us. If you'd like to see past workshops on financial literacy or any other topic, you can find them on our website at cwny.org/past-events. Please visit our website. There's a lot of very useful information there. And now, I would like to take this opportunity to thank Lana Palwitz, our amazing volunteer. She will share on the chat a little form, a very brief form, for you to share your zip code. You sharing your zip code helps us get funding for New York City in general, but it helps us also learn where our audience comes from. So I appreciate you just entering your zip code for funding purposes. Thank you so much. If you dialed in, you can email us at events@cwny.org and share your zip code that way. You can just type the 5 numbers and send us an email there. If you have any questions, your questions will be addressed after the presentation. Feel free to use the chat box at the bottom of your Zoom screen to ask anything during the whole presentation. You don't have to wait until the end to ask your question. We will address them at the end. If you dialed in, you can also send us your questions at events@cwny.org. And now I'd like to introduce you to Kathy Carroll. Kathy is a professional accountant. She has been practicing accounting and providing bookkeeping services since 1981 to the present. So she's very experienced. She works with individual and corporate clients. She directed and ran the Student Association Income Tax Preparation Program at Queens College for 26 years. She also ran an annual seminar at the International Students and Scholars Office at Queens College. And these programs provided free on-campus tax preparation and advice to students. She has also offered to the same service for the Center for the Women of New York. So we're planning tax preparation for next year. She received her BS in accounting from CW Post Center of Long Island University and attended a graduate program at New York University. She's our current treasurer and former vice president of finance, the Center for the Women of New York. And she provides job and vocational training, presents at our financial literacy programs, as you can see, is the CWNY Work Readiness Program Advisor. Kathy, you can feel free to take a snapshot or take a picture of her contact information if you'd like to contact Kathy in the future. She's always happy to answer your questions. All right, Kathy, take it away. Thank you so much for being with us tonight.
Thanks, Cecilia, and thank you for having me. I'm very happy to be back doing the webinar again, and I want to welcome everyone back to our continuing series. The Center for the Women of New York Financial Literacy Series began last year in January of 2021. The first months of our series were concurrent with the tax season. So the early webinars were primarily focused on tax issues so that people could gain knowledge in how to understand their tax situation and possibly prepare a simple tax return of their own. And now that the tax season and the summer break is behind us, the focus of the webinars for the fall season will be the importance of basic finance in everyday life. The importance of financial literacy for all. I had a very interesting article that I read in Newsday. It was in the Sunday, September 5th edition. The title of the article was, "Is Teaching Financial Literacy Effective?" The author was Jill Schlesinger, and you could reach her at askjill@jillonthemoney.com. The article stated that according to research, money habits start to form by age 7, which no one would really think that, but that seems to be the case with the research. So it's imperative for education to start when children are even younger than that. The Newsday article references Susan Beacham, who is a co-founder of Money Savvy Generation. This organization helps educate parents and children about money. Ms. Beacham suggests that 4 money management concepts that children and adults should be taught is save, spend, donate, and invest. These concepts can be taught as part of a daily cash management plan. Whether one realizes it or not, every day involves cash management. The second a person leaves their house in the morning, they would need money for something or other, maybe buy a coffee, get on the bus. It's just from the start of the day till the end of the day involves some type of money interaction with money and money management. The large majority of people receive a paycheck from their jobs. The most important thing that one should realize is that their cash management plan begins with their net paycheck. Now, it's important to note that the word net there, because a lot of times people may feel that they have more money than they actually do, because when you're working at your job, your salary is quoted maybe in an annual figure, let's say, oh, $50,000 or $60,000 a year, which sounds great. It's very good. But by the time you get down to what are you taking home, the net paycheck is what you have to manage, because that's the amount that you actually receive after all your payroll deductions have been taken out, FICA, Medicare, federal, state, and city taxes. And if you have other things taken from your pay too, 401k, that's going to reduce the amount of cash that you have to actually spend, pay your bills, and manage or use as part of your savings. Everyone who is employed is very happy when they receive their paycheck. In the past, employers usually mailed paychecks to employees or handed them out at the job. Now, most large companies and even some smaller ones pay employees via direct deposit. This is the easiest, quickest, and safest way for an employee to get paid, because the money goes directly into your bank account. You don't have to worry about it getting lost or stolen or anything happening to it. It goes directly from your employer right into your bank account. In order to receive direct deposit, an employee must have set up a checking or a savings account at a bank or a credit union so that the employer has a place to put the paycheck. Checking and savings accounts are generally simple to set up. One can visit a bank with the required ID and open either or both of these accounts. Most banks will link checking and savings account. This arrangement can help one to put money aside for savings, because if the money is in your checking account when you get it from your pay, then whatever amount you designate to be part of your savings, you can just transfer it right over. You don't have to make a trip to the bank or figure out how to get it from one place to the other. You can just transfer it automatically. This arrangement can help one put money aside for savings. And once your paycheck is direct deposited and bills are paid from the checking account, any remaining funds can be transferred to the savings account for future planning. Some bank accounts can be set up online and do not require any trips to an actual bank, even to set them up. An example of this would be ETrade Bank. This type of bank account, as in the case of ETrade, can be associated with investment accounts for online stock trading. So that's an added advantage to this type of account, because if you want to do some stock trading for investment purposes, you can have the cash right there in the savings account to do the transactions simply and quickly. Almost all banks have options for online and mobile banking services. These services can help one keep better track of funds on a daily basis and can also reduce trips to the bank with such features as mobile deposit. With mobile deposit, one can literally deposit a check by photographing it with a cell phone. So that's really quite the innovation. You have to have an app from whatever bank you're dealing with, and you can just take a picture of the check, the back and the front, and it can go right into the account. ATMs are automatic teller machines, and they're everywhere. They're in banks and convenience stores, even in bars and restaurants. Now, they're very convenient, especially if you need cash quickly, or if you're in a place that only accepts cash and you only have your credit cards or your debit cards, but their use can lead to money mismanagement. If cash is taken out and spent, it may be hard to keep track of what the money was spent on. You say, all right, you're just going to take $100 out of the ATM. Then you might spend it, just on things that you may not necessarily be keeping track of. So if you're setting up a savings plan on a monthly basis, and you wind up just randomly taking money out of your ATM, then that can deplete your funds, and you may not really know why or where the money went to. Additionally, ATM fees are usually very high relative to the amount of money taken out, unless the money is removed at the bank's own ATM. So if you're dealing with Chase and you go to Chase Bank to take money out of the ATM, generally they're not going to charge you. But if you go to a different bank's ATM, or if you go to an off-site ATM that's not at a bank, it could become very costly. For example, if one removes $100 from an ATM at a convenience store, the machine at that store may charge $3 for the transaction. I'm just using these amounts as examples. It's like every ATM and every bank charges different fees. So let's just say that the store charges you $3. That may not seem like much. You must say, okay, I need to take out some money. $3 is fine. But then later on, when you look at your bank statement, you're probably going to find that your own bank also charged you maybe $5 or $7 for using an outside ATM. So then without even thinking about it, the receiving the $100 has cost $8 in fees. This may add up to a significant amount of money that happens several times during the month. So one should be careful to only use an ATM at their own bank if possible. I know a lot of times that might not be possible, but you just have to, this is the kind of thing that no one really thinks about too much, but it can really add up and, take money away from your savings or maybe money that you need to pay bills. When one opens a personal checking account, the bank will give you a debit card to access the account. The debit card is what you use at the ATM machine. The debit card allows you to make transactions from your account without the use of cash or check. The most important thing to realize when you're using a debit card is that you're using your own money. It's money that's in your bank account. So if one just goes around shopping and spending money with a debit card, it's like that money is coming out of your funds. So it's, it's also very easy to spend money, more money than necessary sometimes if you just like have your debit card with you, and it makes it very easy to overspend. You have to be careful. So an overuse of the card can impact a savings plan that you would have set up. On the other hand, when a credit card is used for purchases, the money is effectively being loaned to you by the credit card company, and you have to repay it on a monthly basis. So that's another thing that you have to consider when shopping and spending money. It's like a credit card is good too, because you're not taking any money out of your own bank account immediately, but then come next month, you may have a big bill, and then that would cut into your funds that you have available for next month. Credit cards are the opposite of debit cards. The funds on a credit card are not yours, even though the funds are available for you to spend up to your assigned credit limit. Many times people feel very comfortable using credit cards and do not take into consideration the interest rate being charged on purchases, plus additional fees, annual fees, and other charges that can be very costly when examined closely. Many store cards, like department stores and other kinds of stores, can charge as high as 24% for their card, and it's not dependent on your credit rating. Typically, if you get a Visa card or a credit card from a bank, you can possibly get a lower rate if your credit score is higher. But with a department store card, they don't really care who you are or what your credit score is. You would have a high interest rate on that card. That's just how they're set up. Additionally, a store card may charge a late fee of $30, even if a payment is made only one day late. And again, I'm just using that as an arbitrary number for the example. Maybe it's $20, maybe it's $25, but the fact that the payment is made even just a little late, you would still get charged, even though it may not get reported to a credit agency as being late, because it would be only just a day or two. But in the end, when you consider the high interest and possible late fees. If you're buying something on sale and you think, oh, I got a great buy on this item, by the time all the other background charges add up that no one is thinking about again, the sale purchase may not be as great as it looked. So credit cards are important, though, because they help establish one's credit score. It's very important to use credit carefully and not to maintain high balances on cards, because high balances can negatively impact your credit score. So if you have a credit card that has, let's say, a $2,000 balance on it, you should try not to spend much on it. Maybe only spend $500, or you want to keep the balances on the cards low, because the higher the balance, it will negatively impact your score. When receiving a paycheck, the ideal situation would be to have direct deposit into your bank account. The opposite scenario is to take your paycheck to a check cashing store. Many people do this because they feel they cannot open a bank account or may feel they need the cash immediately. A check cashing store will charge a percent of the check amount, usually would be from 3 to 5% of the amount that you're cashing. So if you have a large check you're cashing, you could lose a fairly significant amount of money. So that's generally something to be avoided if possible. Automatic bill payment is available with most checking accounts and is the opposite of direct deposit, because they're taking the money out of your account instead of putting it in. Instead of money automatically going into one's account, it is automatically taken out once the payment is set up. For example, if you want to be sure that a utility bill or cell phone bill is never late, you can set up a monthly automatic payment that the bank will just take it out of your account on a certain day every month. The downside to this is that the money has to be available in your account. So if you, for some reason, run low on funds and the day the bill is going to be coming out, the money is not there, you may wind up with an overdraft fee from the bank, which could be $30 or $35. And also, if the payment is put through, the company may charge you the company that you were paying, or the payment may be rejected. So the automatic payment is good as long as you can make sure that you always have a balance in the account that will cover the amount that's being withdrawn. For the last several years, interest rates have been extremely low. Most banks are paying less than 0.5% on basic savings account, which is really like nothing at all. So you may say, well, why would I even want to set up a savings account if I'm not even going to get any interest or very minimal interest? But as I mentioned earlier, by having the account open, it gives you the opportunity to put money on the side for the future, even if it's just getting a little tiny bit of interest. It's more like just like to keep it separate so you can see it. You say, okay, this is what I've saved this month. So it's not really about, nowadays, it's not really about getting a lot of interest. It's more of just having it be part of the plan to have that money put on the side and not being spent just on monthly bills. As we can see, knowledge of finance should ideally begin at an early age. Everyone with a paycheck has the opportunity to plan their finances, no matter what their income is. Knowledge of finance can help one to avoid unnecessary charges, fees, and high interest. It can help one to plan more carefully and understand where their money is actually going. It can help one plan for the future, even if it's a small amount of money every paycheck or whenever it's possible to save. And these are our resources that we have for if you want to look at some websites that have some information on these topics. And as I was planning, developing the webinar, I noticed when I was doing the Google Slides, that Google itself has a finance section that was interesting. It had stock quotes and different types of financial information. So right on Google itself, on the Google website, you can learn some financial information.
There's some more resources, and to all the attendees, we'll share these resources with you in a follow-up email. And thank you so much, Kathy. As always, the information you share is very useful. And this may sound like a very, common sense or simple topic, but there's so many little things that we don't take into consideration in our everyday interaction with money. So it's always good, even if we do know it, it's always good to get these reminders. And there's so many people, like especially young people, that don't know all these little, tricks, and and you don't even think about having to plan for your finances.
It's really true. It's just, and as you said, it seems very basic, and it seems like it should be common sense, but it's just. That was what I was trying to bring out with mentioning about the article in Newsday, that children or younger people should learn these kind of things as soon as possible, because then when they get to be in college or they're out on their own, like very suddenly, they won't be getting into a financial mess.
Absolutely. And it's very easy to get deep into that financial mess. It takes a lot longer to get out of it, right?
That's absolutely true.
Yeah. So let me go to our questions. Someone just asked if this recording is going to be sent after this event. This recording will be posted on our website in a few days. So feel free to go there. And if you'd like for us to send it, you can always send us an email to info@cwny.org. We'll be more than happy to share it with you via email. Now let me go to the chat. Someone else that asked the same question, we will send it. We'll send this information. We'll send the resources definitely in a follow-up email. There's a comment here. A credit card allows greater ability to dispute charges than a debit card may allow. Could you please address that, Kathy?
Yes, that's absolutely a true statement. With a credit card, you can call the credit card company itself and dispute the charge, and they will they'll look into it like right away. And especially, I know that American Express will take the charge right off. It's if you're disputing something. With a debit card, it is a lot harder, because since it is your money that came out of your bank account, it's a lot harder to get the dispute resolution accomplished and get the money back into your account. So with a credit card, it's a much simpler process.
Thank you, Kathy. There's another question here. Could you address ETrade Bank? I know you didn't mention it, but can you please repeat that for our audience?
Yes, the ETrade Bank is an online savings account and bank account, and it's like there are no actual ETrade locations that you can go into. So you can set that up online, and then you can link it to a stock account if you want to trade stocks with ETrade. So it gives you the ability to not only do banking and savings, you can do stocks with it too, if that's going to be part of your investment plan.
Thank you, Kathy. Do you have a recommendation of how to look for an ETrade Bank that's trustworthy?
Well, that's an actual company. So you would go to it. There aren't more than one ETrade. It's just that's the name of
one.
Yeah. So it's E. It's got a little asterisk trade. So you go to their website, and I have with all the people that I deal with my tax clients, I've never had anyone have any issues with them. So that's what I mean by ETrade. That's an actual company.
Great. Thank you so much. And it can be very overwhelming to know, where to put your money, especially if you open an account. And You mentioned that the interests have been really low for the last few years. Do you have any advice on where to invest your money, even though the interest is low? Where would you recommend to put your money if you want to save and gain interest?
Well, the interest rates vary from bank to bank. And as I was saying, interest rates have been historically low on all kinds of accounts. But if someone had more money that they wanted to save, I would say that maybe they could get a certificate of deposit or a money market account, because within each bank, there are levels of accounts. And if someone actually is in a position to save money that they know they're not going to need for a few years, they could tie it up, let's say, into a 2-year CD or a 3-year CD, and those would definitely pay a higher interest rate, depending on what the starting rates are in the bank. The longer you tie the money up, and the more money you could put into the account, each individual bank will offer a higher interest rate on those types of accounts.
Thank you so much, Kathy. Let's see if there are any other questions. Please comment on prepaid debit cards.
Oh, prepaid debit cards. Yes, they're not so good because there's a lot of fees involved with that. And when you put the money on the prepaid debit card, you may not actually have the use of all of it, because when it gets down to a low balance, the low balance part of it may not be usable anymore. I would advise against them, definitely. They're not, and plus they're very, there's a lot of fraud that goes on with the prepaid debit cards, and they're very, I'm very skeptical of them. I would not advise them at all.
Thank you so much for your answer. Do you have any advice on how to start your credit history as a young person?
Well, I would say that as a younger person, to start a credit history, maybe, depending on, obviously, on family relationships, if you have maybe one of your parents has a credit card, you could become a signer on it, because many credit cards allow you to have, additional signers on the card. So in that kind of a case, it would help the younger person to develop credit as they're using the card, but the parent would still be responsible for the payment. So it would have to be a situation where obviously the parent would hope that the younger person wouldn't be going wild with the card. So it's kind of like a lot of, trust involved with whoever you're signing on to your card. But I think that that's a way to get started, is to just be on a card with another person. And then you will be reported to the credit bureau, and you start to develop a little credit. And then there are credit cards out there that are fairly easy to get. There's one, it's from it's called Credit One Bank, and it's a reputable banking operation also. They don't have any physical branches either, but they seem to have, I don't want to say flexible, but it's like easier for someone to get a card from them. They don't have as strict of guidelines, maybe as like a Chase credit card or a Citibank credit card. So something like that may also help someone to get started too, like with a very low credit limit, let's say like a $300 credit limit or a $500 credit limit. And then as you, pay on time and use the card properly, then you would get an opportunity to get a larger credit limit from a card like that.
Thank you so much. It's very interesting. When I came to the United States 20 years ago, I had no concept of what it meant to have a credit history. And, people told me that it was very important to have a credit history. So I decided to apply to credit cards. And of course, I was denied over and over again. And I started by having a credit card through a department store. And I just, it was interesting to hear you say that those are not, advisable. But that's the way I started. And I guess if you can avoid it, it would be better. But at the time, I had no idea. And it was interesting to hear you address that.
Right, but that's actually good advice, though. As a starting point, that's a positive part of it, because department store cards are easier to get also, but they would like to give cards to people because they can charge 24% interest and everything else. So, but that actually is a good starting point also.
Mm-hmm. And then you close it. How does that work? Like closing a credit card that you've had, does that impact you in a negative way?
Yes, you should never close a credit card. It's like you don't need to use them, obviously. And as I say, it's better to have low balances in total on all cards across the board. But if you close a card yourself, that actually does have a negative impact on your score. And of course, the worst thing would be for the card company to close your card. So basically, once you have a card, you should always keep it open.
Thank you. We have a comment in the chat that says best way to avoid interest costs is to pay off card each month. And it's
yes, that's absolutely true, because they can't charge you any interest on the balance if you've paid it off, because the interest accumulates from month to month. So if the card is paid off by the next month, then there's no interest.
All right. Now, what would you tell someone that tells you, like, I'm just not disciplined to handle my finances, and I'm in a rush and busy, so I do go to ATMs, and it's not my bank, but do you have any advice on like how to organize yourself in such a way to avoid those, late fees, like ATM fees, interest with your credit card, late payments, that like what would be like a good start, especially for young people who are just starting and
Yeah, I would say that, like what you said, the first thing you said is actually the key to it, that you have to be organized. It's like, I know, especially, for younger people and not used to it, it may be something that, they're not aware that they should be doing to be organized. But if you have to go to ATMs, probably you should try to open an account with a large bank where there are a lot of branches. So, and some banks have a lot of branches in certain areas, and then they don't have any in other areas. Like one of the banks that I work with is Wells Fargo, and I have no clue why, but they have no branches in Queens or Brooklyn. And they have 2 or 3 branches in Nassau County, but in Manhattan, they're on every street corner. So I would say if you were living in Manhattan, maybe that's a good bank for you, because you can go right to their bank, to the ATM. But over here, they're few and far between. But, then banks like Chase, Citibank, you should probably find a larger bank so that you would have more access to getting into a bank rather than having to go to an outside ATM. And I think that once people start to get a little older, like if they're in college, they have to really start to try to be disciplined, even though it's very difficult.
Yeah, I just it crossed my mind to mention that we had one of these workshops on budgeting, and if you're interested in that one, there will be very helpful tips. You can again go to our website and find our past events there. Thank you so much, Kathy. If you have any other questions, please put them in the chat or in the Q&A section. We're happy to address them. Let me share my screen again. I think Lana shared our social media there. If you'd like to contact us, as we said before, our website is cwny.org. We have 2 locations. One is in Queensboro Hall, and another one is in Fort Totten Park in Bayside, Queens, New York. Everything is on our website, our phone number, our email address. It's here. It's info@cwny.org. And you can also follow us on Facebook, Twitter, Instagram, YouTube. And you can listen to our podcast And I think everything is on the chat, so feel free to click there and follow us. We always are in need of volunteers. So if you'd like to volunteer, you don't have to have any special skills, but we all also love to hear what people are interested in or what you like to do, what you're good at. So reach out. We're expanding, and we'll be very happy to have anyone in any capacity that that works for you. There's a thank you message in the chat, Kathy. Thank you so much for sharing again your knowledge with us. And we will continue to have these financial literacy workshops every month on the third Wednesday of the month. I just want to mention again that we have our C-session panel discussion on September 30th. And we will have a talk on career mobility on October 14th, our walk and run, which is one of our biggest fundraisers, and it has been a tradition of the center. We will have that on the 16th, October 16th. It will be in person and virtually, so join us however works best for you. Kathy, I don't know if you have anything else to say. Again, thank you.
You're welcome, Cecilia. And it's always a pleasure. And I'm glad to be doing the webinars. And I hope that the information is helpful.
Visit us and stay in touch. Thank you so much. And good evening, everyone. Thank you so much for joining us tonight.